Have you made money from crypto trading or crypto mining and you're wondering if you'll owe any taxes? I'm going to briefly break down the tax matters for Canadians when it comes to cryptocurrency. I've had a few questions about tax on my last crypto video, and that was enough motivation I needed to make a dedicated video. I've earned income or crypto from both trading and mining, so I'll be applying everything in this video to my tax return. Before I get into it, please like the video and subscribe to the channel. Let me know if my teleprompter is too distracting or if you can notice that my eyes are moving along with the script. I'm using a teleprompter because I ramble on, and if I don't have a script, if I'm not reading off something, my videos will be 20 minutes. I found that most people stop watching after 6 to 8 minutes. I'm hopefully going to try to keep my new videos going forward that length. If not, it'll be 10, 15, and maybe people just cut off halfway. But like the video and subscribe to the channel. I'll need to separate this video into 4 separate parts, but I'll try to keep it brief. First will be taxes on holding crypto, then taxes on crypto trading, tax on converting or exchanging crypto, and finally tax on crypto mining because they're very different. First part, if you bought crypto and just held it, it went up significantly in value. If you're still holding it, there are no tax consequences. Let's say you bought Bitcoin at 7,000, it's now 70,000. As long as you held and didn't do anything else, there is no tax. You have an unrealized gain, and thankfully, as of 2021, there are no taxes on unrealized gains yet. Second part, similar to a stock, if you bought and sold crypto, the selling part created a taxable event. You disposed of an asset, now you must see if you owe any tax on that sale. Just like a stock, if you sold it for more than what you bought it, you have a capital gain. If you sold it for less than what you paid, you have a capital loss. If you watch my video on Canadian taxes for beginners, you'll know capital gains are taxed at 50%. 50% is tax-free and 50% is taxable. This doesn't mean it's taxed at 50%, a common misconception. If you made $100 in capital gain, $50 goes directly in your pocket, it's tax-free. The other 50 will be added to your income and it gets taxed at your personal rate. If your personal rate is 30%, you will be paying $15 in tax, which is 50 times 30%. On the other side, if you have a capital loss, you might be able to use this capital loss to reduce your taxes. Here's the issue. You can use capital losses only against capital gains. You can't use capital losses to reduce your employment or business income. If your trading app or trading brokerage doesn't keep track of your cost basis, aka what you paid for the crypto, you'll have to keep track of it yourself and declare this on your tax return. Third part is exchanging one crypto for another. If you bought Bitcoin, you bought it at 7,000 and now it's worth 70,000, you decide to convert all your Bitcoin into Ethereum. You just created a taxable event, even though you didn't sell. My previous example was if you sold your Bitcoin, you would owe taxes. But in this scenario, you didn't sell. So why is that a taxable event? It's pretty much a barter transaction. You exchanged one asset for another. It's the same thing as selling your Bitcoin for 70,000 and then buying 70,000 worth of Ethereum, just skipping that middle step. Any gain made from exchanging the initial crypto will be taxed as a capital gain. Again, an easy example. If you bought Bitcoin for 7 and you exchange it when it was worth 70, your gain is 63,000. Even though you don't have the cash to pay it, you have $70,000 worth of Ethereum, which you didn't have before. The excess, that extra 63,000, that's your capital gain. Last scenario, if you're mining crypto, what are the potential tax consequences and can I write off or deduct my expenses for building the mining rig? Initially, I thought mining was business income, not capital gains. Business income has a 100% inclusion rate, meaning it's all added to your income, as opposed to capital gains, which has a 50% inclusion rate, meaning only 50% is added to your income. You'd see which one I'd prefer, right? My issue here, let's read how vague this CRA memo is. The income tax treatment for cryptocurrency miners is different depending on whether their mining activities are a personal activity or a business activity. This is decided case by case. A hobby is generally undertaken for pleasure, entertainment, or enjoyment rather than for business reasons. But if a hobby is pursued in a sufficiently commercial or business-like way, it can be considered business activity and will be taxed as such. What am I supposed to do with this? I currently have one mining rig. Do I claim this under T2125 of my tax return? Or does it go under Schedule 3, capital gains and losses? Here's what I'm going to do. Since this is not my main business, or I'm not conducting it in a business-like manner, with only one mining rig, 8 GPUs, I'm going to claim this mining income as a capital gain, not business income. One last item I didn't mention, if you're day trading crypto, the CRA might treat this as business income. If you're doing daily buys and sells or trading multiple times a day, the CRA will try to argue that you're running a business and you should be taxed as a business and not as capital gains, so be wary of that. There are no hard set rules, it is judged person by person. I hope that answered your question about crypto taxes in Canada. A little update on my side, I have one mining rig with 8 GPUs earning 1,500 Canadian per month. I'm going to try to build more, I'm really enjoying it. It's super passive, I don't know what I could be enjoying, I'm just sitting there and I get paid every week. I'm currently waiting for Best Buy to get a new shipment of GPUs and I'll jumping into it to buy more GPUs and build more mining rigs. Thanks for watching and tune into the next one.